Good morning, guys. Um, it's been a while since I uploaded a video, so I want to give you a market recap, and I also include a market breakdown on the setups that I took, the pairs that I was looking for this week. So essentially, I had three pairs that had so much interest. That was BTC USD, AD200, and NZD CHF. These were the only three pairs that I had much interest this week. So on your BTC USD, give me a potential trade or a potential move, potential opportunity that I could take. On the AU 200, I'm still waiting for the market to retrace and tap into my demand zone. So in the meantime, I'm patiently waiting for next week to see how it will either create a new structure or manage to tap into my zone. On NZD CHF similarly, I'm still waiting for the market to retrace and tap into my surprise. Oh, I made a mistake right there. It has to be my demand zone or create a new structure for me. So on BTC USD, this is a trade that I took on, has to be on Tuesday. Has to be on Tuesday last week. So I'll give you a breakdown, my thought process, and what I was exactly thinking when I was about to take the trade. What was I looking for on the 4-hour time frame and the 15 minutes time frame? So by the time when I wanted to take a trade on BTC USD on my structured time frame, what exactly was I looking for? I mean, when you open the chart and then look at your charts, you ask yourself, what are the reasons for me to take a buy, or what are the reasons for me to take a sell? So my analysis usually starts from the 4-hour time frame. So on the 4-hour time frame, what am I looking for? Firstly, I need to look for structure, or what's defining a trend. So on my most recent price action, as you can see, I need to identify my structure. So clearly you can see that the market was going up, but that's not even quite enough for you to deduce or give you an exact point where you can take a trade. So firstly, you need to identify the structure. So that's my swing low, a push to the upside, my swing high, and then a retracement to my swing low, and then another push to the upside, breaking the previous higher high, right? So when the market did that, I define it as a break of structure. So using my trend line 2, I'll mark there as my break of structure. So in the most recent price action, I will clearly define it as we are in an uptrend, right? So for you guys to really understand the swing highs and swing lows, I'm going to mark it like this, right? So after identifying your structure, what's next? I use my Fibonacci tool, which can help me to measure the retracement, right? So you take a Fibonacci level from your swing low to your swing high. So based off that, what the Fibonacci will actually help me is to identify my 50% retracement level. This allows me to define my area of premium and discount area. So just a quick note, I only look for buy opportunities in the discount area. So in this case, anything that is below the 50% Fibonacci level, that defines my discount area, right? So anything that is above the 50%, it defines my premium area, right? That's the area where I have to be looking for sale opportunities. So in this case, we're in an uptrend. So my interest is for buy opportunities, which implies that I need to be looking for buy opportunities in my discount areas, right? So, but in my discount area, what exactly is my area of interest where I'll be anticipating for the market to to retrace? So the concept of supply and demand, that's when it starts to play in. So as you can see, this green candle, that becomes my area of interest. And this is what we call demand zone. So when the market did this nice impulsive move, so as you can see, we had this momentum candles, consecutive candles until it managed to break the structure, right? So that's a green move that I usually look for. What next? The market managed to retrace and tap into my zone. So marking that zone or marking that candle as your origin of interest. So that becomes my demand zone. What I'll be waiting for is for the market to retrace and tap into my zone, right? So when the market taps into my zone, that's when I have to head over to my lower time frame and define my entry criteria. So that different ways you can define your entry criteria, but you need to know that when the market tap into my zone, it doesn't necessarily mean that it will reverse. Always remember that a reaction doesn't equal to a trade, since price can manage to store at that area and then break through to the downside. So you need to have entry confirmations on your raw time frame that will define a change in reversal of your market. So others love to use indicators, others love to use reversal patterns, say the triangle, the double bottom, the double top, right? So anything that resonates with you that can determine a reversal pattern or a change of trend on the lower time frame is what you need to have to be using. So as of now, I will head over the lower time frame, keeping in mind that I'll be looking for the buy opportunities below that line. So let me extend it for you guys to really understand it. Remember, I'll be looking for buy opportunities below that line. So when the market manages to cross above that line, then it makes my setup invalid. Or to make it clear, I won't be looking for any buy opportunities. That implies that I've missed the move. So when I head over on my 15 minutes time frame, as you can clearly see here, you need to also first by identifying your trend. So what's happening on my 15 minutes time frame? So let me start by marking out my structure, right? So that's my swing low, my swing high, my swing low, my swing high, right? That's my swing low, my swing high. So as you can clearly see right here, we are in a downtrend. And then you have to ask yourself, is there anything that is indicating a reversal? So in the meantime, we have nothing at all. So the market, as you can see already, is really in a downtrend, right? So we need to see an indicator that can tell us the market is about to retrace. So what you need to do is to wait for the market to give you a clear cue that it's showing a reversal, right? So as you can see there, we had this M pattern, right? So as you can see clearly, we're in a downtrend. And then the market showed this reversal pattern. That's the double bottom, right? So just to market for you guys to create understand, to create a C or to create a visual the pattern. That's it. It's the same rule that we use. So the market managed to break above the neckline, right? So when the market breaks above the neckline, what do? You wait for the market to retrace and tap into your neckline, right? And then you have to, I'll mark my neckline as my area of interest, where I'll be waiting for the market to retrace and tap into that zone. Okay? So that's when there I will place my pending order, waiting for the market to fill me out, and then a stop loss slightly below, right? And then you have to aim for a minimum of 1 to 2. See? So that's exactly what I'll be looking for. So what do? You wait for the market to retrace and tap you in. So as you can see, that's exactly what happened. The market managed to retrace and tap me into the zone. And then we went into a little bit of a drawdown right there, right? So as you can see right here, I'll place my stop loss below, my take profit right above there. So what next? You just have to wait for the market to play out, guys. Be patient enough and then wait for the market to play out. You also need to understand that this is only a 15 minutes time frame, and for you to catch that big move on the 15 minutes time frame, it usually takes hours. I'm gonna be honest with you, it usually takes hours, so you need to have a lot of patience, hold the trade, and observe what's really happening. You need to point out the emotions that you're having right here, because every time when the market goes down, it's another thing, guys. You'll be like, oh, now I need to exit the trade, but I promise you guys, just be patient and let the trade play out, right? So when the moment it hits 1 to 1, you need to go break even, because you don't want the market like going above 1 to 1 and then reverses back and then stops you out. Nah, it doesn't work like that. When the market goes at least 1 to 1, you break even and then let the trade play out. So as you can see, that's how clean the market moved. And I promise you, it's not always this clean. Sometimes it can retrace and tap you out before it continues to its intended direction. So overall, that's all for my previous week, guys. I will keep you guys updated.